It is Friday. It is a fun day. It is something we're going to break down in the markets here today as well. We've got Coach Frank to join us to do it. Welcome out to our show here on our YouTube channel out there. Hashtag Team Tackle right in the chat as you're coming on in. Let's start the conversation the right way as we always do. And as you know, I always ask you guys, and I appreciate it when you do it. Thumbs up. Make sure we get the analytics up. Let's get the word out on tackle trading. And if you're new to the channel, we do this show every day. The markets are live. We go live at 12:30 Eastern. So be a part of it and click subscribe and click the bell. We got a lot to get into here today. The markets are rallying after Fed Chair Powell delivered a speech at the Jackson Hole Symposium on a virtual platform. Talked about future expectations for tapering and interest rates. I know Coach Matt's got some opinions and some takeaway from watching that speech.
I have no opinions.
None at all.
None. None at all.
Well, we know the market's opinion. Market likes it right now. I'll tell you that. So we'll get all of Matt's thoughts and takeaway from that. We'll break down the price action on the charts. Coach Frank is here as well. And Frankie, how are you doing today on a Friday, sir?
Oh, I'm doing fantastic. I'm excited to be here. I'm excited about the market being excited about the speech that Matt's not excited about.
Not at all.
It's an exciting day. I'm excited to be here hanging out, talking, trading with the team for sure.
And Matt, pleasantries first. How are you doing, sir?
I just watched 20 minutes. I want to get back, but I'm doing fantastic. I'm excited to be here, to break down the activity in the market and kind of say goodbye to this week in the market. It's been an interesting week, though. You got to like the price action. You got to like the defensive nature over the last 4 days. And quite frankly, after a strong start on Monday, seeing the defensive nature of the market and the consolidation happen over the next 4 days, breakout on Friday, you're going to have some good charts coming into the weekend, and I do think that's exciting.
Yeah, it's been a very good week for the bulls, Frank. There's no question about it. I know that you've done your scanning, and one thing we always do on Friday is take a look at some of your favorite charts. How are the setups out there right now as the price action has been favorable for the bulls?
There's a lot of breakouts, not a whole lot of retracement type of trades. That was kind of last week. We had the follow through like in finance and things, but a lot of really nice looking breakout candidates, even a few reversal candidates floating around out there.
Yeah,
I was impressed. There's definitely going to be things for us to trade next week.
Absolutely. Looking forward to seeing what you got.
I think it's a combination of finding the cleanest charts on breakouts on the top side of the market and finding some really, really healthy developing reversals. But you are absolutely right. You're looking at breakouts, and I haven't done all of my scanning yet, but when you're talking about a market that consolidated for 4 consecutive days and a breakout today following a very good response on Monday, that's gonna lead to a lot of breakout opportunities. So, but yeah, it's a dime a dozen at the top end of the charts. What I'm real curious about, Frankie, as we get into that scatter report meeting, is those potential reversals and those potential ones that are in their second leg of the reversal that has catch up in them, right?
Yep.
And so there's some of that out there as well.
Yeah, there's some really interesting reversals floating around. And early and, like you said, the second leg parts too. So we'll have some fun ones to look at for sure.
Let's not bury the lead, though. We got to have a conversation here. We've been waiting for it all week, Matt. In fact, we've been waiting for it for about a month and a half since the last Fed meeting. They were hinting at their July, policy meeting that they'll be talking tapering. We even had a podcast about this 3 weeks ago. You laid out your arguments, your thoughts as to what the Fed would do, and we've seen it play itself out, by the way, in the last 2-3 weeks, exactly the way that you were thinking. And so that is something. If you're not listening to that podcast, you go back and listen to it, by the way. But Matt, here's the speech: Friday symposium at Jackson Hole. Chair Powell delivered it. The market likes it. What did he say? What did we learn?
Well, number one, I don't think we're going to be talking historically about this speech in about 6 weeks from now. So that's number one.
So this isn't Gettysburg. This isn't the Gettysburg Address. We're not.
I'm going to remember the speech just because of how I felt when he was trying to justify the transitory language of inflation. But no, I do not believe historically this speech, virtual symposium at Jackson Hole, where he reads a teleprompter from some dude in college who wrote the speech for him. No, I don't think that's going to be remembered very much. But the simple reality is he gave a market speech. That's what he did. He was speaking to the market participants. And he delivered a market speech, and he told the market exactly what they wanted to hear. Tapering has been confirmed. It does look like tapering will occur this year. The anticipation was it was going to be announced in September, although Powell stopped short of saying that is going to occur. What do we get this week so far? About 7 Fed speeches, all hinting towards that. And so I do believe that that tapering will be announced in September. Powell did stop short of discussing specifically the timing and pacing of the tapering, but Bullard did lay out a test to the market earlier this week where he tested a 6-month tapering program that would taper about $20 billion a month based on that time frame. The market kind of took it in stride, and I do believe the Fed does that on purpose to test certain market reactions. And Bullard's was the only real speech that detailed any timing and pacing conversation. And with the market taking that in stride, I do believe that that could be in the cards. But again, we do not know exactly the timing and pacing of things. That will be announced in September, most likely, tapering to begin at some point in the fall or later on in 2020. The expectation is to have tapering done sometime in 2022, most likely first to second quarter of 2022. Now, that was all confirmed today by Powell, right? But that's also what the market was already expecting. And so that isn't really have anything to do with what the market wanted to hear. What the market wanted to hear was liftoff regarding interest rates, because there is a belief that tapering leads into interest rate adjustments. And there's many on the Fed, based on their June meeting, that are seeing more interest rate increases in 2022 and more even seeing it in 2023. And so Powell, we were all anticipating whether or not Powell would talk about interest rate liftoff and if tapering would lead into interest rates. And as of right now, Powell literally came out and stated in very clear terms that tapering is not a signal towards interest rates increasing. And although that they have met the standard for the economy meeting substantial further progress regarding tapering, and that regarding, and I'll get into inflation here in a second, but regarding the labor market has met the standards for tapering. The economy has met the standards, and the standard is their subjective standard, okay? Has met their subjective standard for tapering, but has not met it for the interest rate. And he was very clear that the labor market should continue to improve, especially as kids go back to school and the economy continues to reopen. He did talk about Delta and how that could throw a little bit of cold water, but their projections were basically that the labor market still has a tremendous amount of room to improve, and they do not want to act on interest rates in the face of that improvement, and they don't want to throw any cold water on the improvement of the improvement in their projections of the improvement on the labor market. And so the Fed, they got what they wanted to hear. Tapering is going to happen, but that is going to stop short of the interest rate conversation. And then he spent the bulk of the time today talking about inflation and whether or not inflation truly is transitory. And most of the speech was centered around the justification of the opinion the Fed has on transitory. And he used multiple examples of the past, both in the 1950s and the 1970s, of examples of what they have learned from historically of in the face of short-term negative economic moments or short-term negative inflationary moments, that if the Fed acts in the face of what they deem transitory, that compounds the problem down the future. And although I certainly agree with the 1950s conversation, the 1970s is not a decade I would use as an example of transitory inflation. But it was a very interesting speech because it was obviously centered and directed towards the market participants. As an American, I felt it stopped short communicating with us.
Yeah, and regardless of what he says, I think there's many unanswered questions regarding transitory inflation. I know that some of the data he was suggesting pointed towards durable goods coming down in July. You and I have talked about that internally. We had a conversation about it this morning as well. I get the argument he's trying to lay out there, Matt. As somebody who is not just looking for price action response and actually just clarity from the Fed, I still don't feel like I have it from them. I mean, it's nice to know that they're waiting on interest rate hikes, I guess, if you're a bull, but I still feel like there's leadership here.
The importance here is that the market heard what it wanted to hear. as an individual that is concerned about inflation, there is nothing they said that Powell said today that dissipated my concern about inflation. In fact, it compounded it. I think Powell's asleep at the wheel regarding the inflationary conversation, quite frankly, and the failure to act in what they deem short-term transitory inflationary situations. If they're wrong on transitory, and I do believe they are wrong on transitory to a certain extent, that is a death sentence to millions of Americans from an economic perspective.
Yeah.
You can't get that one wrong.
Well, and we got a slew of economic data even here this morning regarding inflation. July PCE report came out, showed 4.2% year over year increase, 3.6% when you strip out food and energy. These are the highest numbers in decades, Matt. So it's a bold call to say that they know it's transitory when we're seeing high readings right now currently.
Well, what was fascinating to me was in the conversation of transitory and whether or not the inflationary pressures right now are transitory or not. Powell talked about used car sales contracting, and yes, after a meteoric rise over the last 8 months, they've contracted a tiny bit. That's what we call a momentum bullish retracement in stock market language.
Correct.
Is what we call that. So I thought that was a little bit dubious. And then what I found very concerning and just kind of complete miss here was he talked about durable goods and how durable goods and the contracting behavior of durable goods is going to lead to contraction in inflation. And I just want to remind people that durable goods are things that we don't purchase very often. Yeah. Like they're just not. They're not. And so, like when he's talking about durable goods contracting and used car sales contracting and how that is leading to the belief in transitory, how inflation is transitory, and how the reporting structure of last year we were shut down to this year we're open, how that's playing a role in it. I just felt like, honestly, guys, I just felt like a lot of this was excuses and justifications for their policy. And the whole time I'm thinking, when he's talking about used car sales and when he's talking about durable goods today as justifying the transitory opinion of inflation, I'm asking myself, I'm saying, well, okay, well, what about food prices? Mm-hmm. What about energy prices? What about healthcare cost? What about housing cost? What about educational cost? What about all these other costs that have risen dramatically that have a massive impact on the consumer on a day-to-day, month-to-month basis, whereas durable goods and used car sales just don't?
Did he address housing prices at all? Because we're at all-time highs.
Didn't mention it.
Didn't mention it.
Didn't mention cost of education, healthcare, didn't mention anything. He just simply mentioned how durable goods and used car sales led to a certain belief in transitory inflation.
So he told the market what they wanted to hear is basically what I'm hearing.
This was a speech written and directed for the stock market. Yeah. 100%.
Well, let's talk about that stock market then. Price response here after a high base consolidation, Matt. Obviously, the S&P 500 was riding the lightning and then consolidating through the week in front of this. Now we're looking at a potential high base breakout here. What is your read on price action here?
Well, like I said, the market, I do believe the last 3 days has been waiting on the Fed here today, especially after a strong start to the week, following last week's confirmation of the 50-day moving average bounce. Good drive up in price consolidation in front of the Fed, and then the Fed was, and then a lot of the market participants were waiting on the Fed speech today, and they got what they wanted. They got what they wanted in terms of the transitory language. They got what they wanted in terms of the patience. They got what they wanted in terms of no liftoff for the foreseeable future from an interest rate perspective. Dollar down, gold up, stocks up. That's kind of the market response, and that should tell you exactly what the Fed said here today. But when you're looking at this from a technical perspective, look at the consolidation over the last 3 days. 9 EMA catches up to it. You know, Frankie, we've been here before, brother.
I was just thinking that. Like, how many times have we had this exact conversation?
We've been here before, brother. We've been here before. High base, 9 EMA catches up to it. Break this down on an intraday chart. You see a couple zones right here at the 44.93 level, and then obviously the 44.98 by 4,500 level. You see the strong market response following Fed's the release of Powell's speech. You see that strong market response, consolidation as you kiss against the breakout, and now you're fighting the breakout. This market wants to buy above the breakout 4,500, although we are now late in, well, midday, but you know how it goes on a Friday here coming into the weekend. We're all kind of waiting on Powell. We got Powell. We did what we're going to do. Now let's go take the weekend.
Yep.
So I think it's been a fascinating week this week. Technically, you got what you wanted this week if you're looking for great potential trades on very good technical setups coming into next week.
Yeah, and I want to look at
agree.
all the indexes, but I want to get Frank's take for just on the price action. Frank, you famously have talked about how Friday afternoons you don't like to enter a lot of new trades. That's a personal kind of expectation for you as we're getting this price action here on a Friday. A lot of great trade setups. How are you reading it right now, and how are you approaching it?
Yeah, I mean, I expected this will be roughly speaking what the close looks like. You never know for sure, right?
Mhm.
But generally speaking, we're about done by this point on Fridays if there's nothing to freak the market out at least. So, I do like all things being equal. It's not that I won't take a breakout trade on Friday, but I would much rather take it on Monday, personally. And that has really almost always been true for me. And it's probably in large part psychological, right? I don't know that there's any wisdom in it, but it is my general approach. But I think at this point in time, you are just, let's make sure we maintain. Anything can happen. I would expect we are going to close something like we're looking at like right now. We'll check on the futures on Sunday, get that follow through, and that will be the green light. And boy, I've got some breakouts to trade. I mean, that's not going to be my problem next week. I know that much.
Mhm. And Maddie, I'm looking at these indexes and sectors, and
Yeah.
obviously the S&P 500 is looking great. I'm looking at technology and communications kind of as standouts right now. I'm very interested in what's going on with the Russell. Let's take a peek at some of these sectors, maybe comms and tech, and tell me if I'm reading it right. I think those are two most attractive areas for breakouts for me personally. What's your take?
Mhm. Well, when you're looking at the aggressive sectors this week, you are looking at a little bit of continuation analysis from what transpired last week. So I am looking forward to the discussion on upgrades and downgrades in the sectors with the coaches today. Given the fact that we did officially break out last week, saw the continuation of it this week. I do like the defensive nature as I've discussed over the last 4 days, and you got to like the price response here today coming off the 9 EMA right there, the pink line. And so you got to like technology here. I do think technology is looking at getting upgraded here. Technically, you look at the technology sector here over the course of the last month or so, and you see some really decent consolidation that got broken out of, on last Friday, but definitely see the confirmation on that on Monday. And so when you're looking at this Monday candle here, I got to call that a confirmation on the sector, and then the defensive nature of the market over the last 4 days with the first test of the 9 EMA passed. I do think technology is something that is looking to get upgraded. Comms, you got a very similar conversation happening right now, a little bit more relative strength here today with the communication sector. Maybe that was Coach Greg's influence with Coach Greg coming in yesterday, bringing in a bunch of comms. Got the taco trading impact there.
That's right.
I like that. But comms breaking out here today, and once again, you saw good price appreciation coming off the 50. You did break out of that minor resistance level right there at about 83.5. But the one I think most traders are looking at for some degree of trend confirmation is 84, and that's what you're looking at a breakout today of, is that 84. And then when you look at this on a weekly chart, over the course of the last 4 weeks, you saw that simple consolidation. This is a sector that rides the 9 EMA from a weekly perspective. And then you see that breakout out of that consolidation, definitely spotlighting communications coming into the weekend. There's no doubt about that. Unlike Frank, I have not done my scanning yet, because I was a lot of, Powell. And because he talked about the 1950s and 1970s, I had to go look at my own research
You're a
notes.
good man.
Yeah, I just got all anal about it. So
I'm watching charts. You're watching Pal. I won, I think.
I'm jealous.
I'm calling myself a winner.
I'm jealous. Listen, switching jobs here. I want that job. This is ridiculous. Looking at communications, you got to like the breakout there. And then discretionary, kind of just summarizing the growth areas of the market. I am looking personally, and again, these are just my personal thoughts, because the rankings at Taco Trading are not my personal rankings. They are the collective mind of Taco Trading coaches. But I am looking at upgrading comms and technology from a technical perspective. You gotta like the price action response you've seen in discretionary. I just feel this sector's got some work to do, quite frankly. You got some you got some left side of the chart mechanics that are concerning. Number one, you got a resistance zone at 182, 182 and a half. That's concerning. Even if you break out of that, where you going, 184, 185, there's just not a lot of movement you can see there without it finding some either minor or significant resistance zones. And it's a sector that is mixed from a fundamental perspective, has no theme attached to it right now, and somebody figure out the consumer right now. Right, somebody figure out the consumer right now, because the consumer data is extremely mixed lately as well, with consumer confidence even today coming in at a 70 handle. So
terrible reports.
Yeah, it's just very, very mixed. Very mixed.
Yeah,
but the Fed did tell you were making a little bit more money and you didn't have to deal with as much inflation today. So that's good news.
That is true. Matt, in that space, I mean, that sector is so big, right? There's a lot of different type of things. It reflects that too. There are some really good setups and some interesting trade candidates for sure in that area. But when you look at it broadly, you're just like, I'm looking elsewhere, right? And so it's definitely an under the hood type of sector going into this way. Whereas, say, finance, it's pretty much
it looks like a
everywhere,
beat up 1970s Ford pickup truck.
It doesn't look like something I
got the
like something I would
1970s
drive,
on my mind
right?
today. But yeah, it's I'm sure you can find a diamond in that rut, but why when you got comms breaking out and tech supporting it, and some other very interesting price action in the cyclical areas of the market. And let's talk about those cyclical areas of the market very quickly. In looking at energy looking at a potential right shoulder breakout here, reclaiming all the moving averages. 2 weeks ago, we were sitting in the meeting, in the scouting report meeting.
Yep.
And we were all looking at this right shoulder breakout right here. And all of us were looking at this saying, okay, if we can break out, we can run, right? Well, I'm kind of looking at the same scenario here. If we can break out, and we just did, we can run. The problem, where are you going to run into this time? You still got to handle 50, and you got a contracting 50-day moving average that is right north of 50. I like the price action here. Might not like it from a swing trader perspective, though.
Yeah, this is an area that I think we need one more week. If we can hold this break and do the dance between this breakout and, say, the 50-day moving average, it could really get some nice charts next week. But I do think, at least broadly speaking, we don't have a lot of great technical setups in energy right now, at least in my eyes.
I still think you just tested the 200-day moving average. Crude has been we did have bear stop out day in crude. And you got to like the momentum you're seeing here as well. They're back up into some degree of neutrality between the 65 and 75 zone. You got to like that. That certainly supports the energy argument. But for me, I do think with the price action the last week in energy, I think the value hunters are alive and well right now in that space. And I think the position traders and cash flow darlings are alive and well right now in that space. For the swing traders like you and me, Frankie, I think we're saying, let's let the value guys make a little money next week, and then we'll come in.
That's
exactly.
Right. That's
value.
Timing.
You guys make some money, clean up our charts a little bit, and then we'll join the party.
Yep. That's kind of my philosophy on energy. But again, like the breakout, there's just a lot of chop between where it currently is and that 50.5 level. A week of positive technical analysis could certainly clear up some of those charts. When you're looking at materials here, once again, one of my favorite areas to scan in is actually materials. I love scanning in materials because, unlike other sectors, material has like 3 different industries that act like sectors. They have their own type of philosophical viewpoint of things. And so you got your commodities, and then you got your chemical companies and whatnot. So I haven't done my scanning. I do like the 50-day moving average confirmation here. Basic material had a moment where it could have got fairly ugly. It did hold its support levels. Good price appreciation. Once again, a little bit of a breakout there. I'm not certain you're looking at an upgrade here. I would be favoring a 5-point upgrade, put it into some degree of bullish territory with the confirmation of the pivot point. But again, you're looking at a little bit of neutrality, and you do have challenging environments left of the chart. So I can understand some degree of neutrality there. Looking forward to, yeah, go ahead.
Can you guys give me a snap rate on something in materials real quick?
Yeah.
GDX, because I'm with you on the materials thing. There are those different areas within materials. Obviously, the chemicals are all just robust and strong. Gold miners caught my attention today with the reversal characteristics developing, Matt. That's 3.5% move. I mean, what's your read on this?
Good. I've been talking about it for 4 consecutive days. Yes, I'm glad it caught your attention today.
Tim's just not been listening at all.
I'm glad. Like literally, you were in the halftime report when I was talking about how gold is going to confirm, and that's going to give us a nice little value buy on GDX. I'm glad you're coming to the party. Were you the one who got the tick up there?
I did not. No.
Oh, man, we got to get your tick above that 20-day moving average. Let's go.
I'm still waiting for a new trigger on this one. Yeah, that's right.
No, there's no swing trade here, but I do love the zone though, Tim. I absolutely do love this zone. Again, the daily's a choppy mess. Clear it out there with the weekly chart. You look at the zone right there north of 30 on GDX, and you can see that pivot point right there at about 30.90, 30.50, really kind of to 31. That coincides nicely with some old resistance channels back in 2019 and 2020, and that's exactly where you're at right now. And so with the nature of where you're at, relative to where we have seen resistance play out historically, the value hunters are going to be alive and well in the gold miners, and quite frankly, I'm not sure there's anything we enjoy buying more than value hunting at the gold miners, because every single one of us know we can just sell covered calls against all of those positions, and they're really good covered call stocks is the point. And you want to pick up really good covered call stocks at support, right? You want to start accumulating them. And so the argument I made a couple days ago, just to kind of bring this home here, is when we were looking at gold, I made the argument that gold is front running the behavior of GDX, and a lot of it was algorithm driven. And so when you saw this same degree of price action happen on GLD, and obviously I'm looking at the futures contract GC right now, when you saw that same degree of volatility to the downside, but it took 2 days instead of 2 weeks, and when you saw that recovery and it took a week and a half instead of what should take more time in gold, a lot of this is algorithm driven, right? Stop out hunt, algorithms jump, everybody piles on, bring it right back home to where it would have happened before that event occurred back in August. And so what I said the other day, and I still hold this to be true, the data you're seeing here and the evidence you're seeing building in the gold space, especially now after this week of the positive breakout on Monday, followed by the continuation on Friday, reclaiming the 200-day moving average, this price action here, if you believe it, it is absolutely going to be a support to the price action of GDX. And if GLD and gold is front running GDX, this is absolutely a buy on GDX. And so I do think the value hunters are going to be alive and well here. The cash flow darling is going to be alive and well here, and absolutely people are hunting for good cover call positions and good potential reversals in the gold space. Absolutely. I think we're early, but I don't think that's a bad thing.
No, the early indications though are the ones that we're seeing, and they're exciting. There's some things happening there that are grabbing my attention. So I appreciate you answering and breaking that down. Anything else in sectors?
Yeah, very quickly, when you're looking at industrials, again, a little bit of recovery analysis. I don't think that changes the overall structure of the bias towards the industrial space. You just got to like the fact that it held its support channels, and now you're back up within the ranges. When you're looking at the areas of finance was one of those areas that we wanted to spotlight last week. Every single coach loved this bullish retracement last week. They were on all of our reports, in all of our pro level commentary, in our coaches shows, cash flow clubs, traders lounges, Discord, you name it. Every coach loved the financial bullish retracement here. And now you're kissing up against a resistance level. And again, haven't done my scanning yet, but I'm willing to bet we do have a little bit of overextended scenarios that maybe need 1 or 2, 3 days to kind of shore up, Frankie. You're muted, Frank, or your mic's not working.
Oh, yep, there we go. There, broadly, you're right, but there are going to be some that kind of spent the whole week kind of hanging out at resistance. So I think there are things, if we want to run early, that still have really good risk to reward entries.
Nice.
And broadly, if we want to wait a week or half a week, we're going to get some really nice things, because there are, just like last week, there were 1 million retracement candidates and throw a dart. This week, there's 1 million breakout candidates and throw a dart.
Yeah, like it. And then when you're looking at the defensive natures of the market, healthcare, consumer staples, real estate, and utilities, when you're looking at those areas of the market, once again, I don't want to say these trends are over in terms of the overall bullish trends. They're still intact. But they are losing momentum. They are losing favor. And so, whereas there was a lot of accumulation, once again, I'm just going to always point to that bullish retracement, guys. It might be 5 years from now, and I'm still going to come back and be, do you remember that bullish retracement you guys disagreed with me on? Always, that's just going to occur. But you might see some rotation here. And so I am looking forward to getting all the opinions of the coaches. But what I'm seeing is a little bit of volatility shift in utility. I'm seeing I am absolutely seeing slowing momentum in utilities. And if comms and technology are going to break out, typically utilities is not going to follow that in the same time frame. And so I personally, I'm looking at a downgrade in utilities based on the slowing momentum and volatility shifts. When you look at real estate, you still got to like it, but you don't like it nearly as much as you did a month ago. The trend has obviously slowed down. You're looking at some degree of neutrality in the real estate area of the market. Obviously still bullish with a bullish continuation pattern, but due to the slowing momentum, and quite frankly, due to the market not finding any legs in the last 2-3 weeks, I feel like a downgrade is warranted in real estate, especially as we start picking up a little bit of steam in the growth areas of the market. And then when you look at healthcare and specifically consumer staples, healthcare was one of our highest rated areas of the market for quite a while now. I think you're looking at a little bit of a downgrade here. Momentum has shifted, volatility has shifted, the previous breakout got snuffed out, and so I do think you're looking at a little bit of momentum shift here in the healthcare space. And once again, this is pretty normal at this point. When you start to see comms tech growth and some cyclical working, that's going to be at the behest in the short term to the defensive nature of the market.
Yep.
Wonderful breakdown. I appreciate that. And we're going to be breaking these all down together as coaches at Tackle Trading here, after the show for our weekend reports that we put together each week. I do want to just get one last read, or at least just a thought out there. If Coach Tyler was here, we'd spend 10 minutes on the Russell 2000, which had a nice candle.
Okay, let me do what Tyler would have done in 10 minutes. Right shoulder breakout, price projection should be to the previous level of resistance. There are going to be some opportunities here in the short term, but the long-term trend has not been broken yet.
That's right. All right. Let's go into the commodity market next, then keep moving through our show. We are going to look at some charts a little bit later when we get into stock talk, a couple of stocks and earnings as well. But let's look at crude oil next if we can. You guys talked about energy, obviously, in relation to what's going on here. Frank, what's your read on crude?
Yeah, I mean, you got to like the response. I still think it's a tough area to try to trade in, at least swing trade in. I still think that you're kind of, in the box, so to speak, if you will. But I mean, if you're not concerned about the overhead, which there's plenty, right? Whether it's the 50, the previous swing, there's plenty to be a little worried about. I do really like, one, we got the bear stop out day. Two, we've kind of seen that 9, we've turned that frown upside down. So if you look at the 9 over like the last 4, maybe 8 days, it's smiling at us now, right? That's always a positive development from a bullish point of view, in my estimation, at least. I just think it's a really tough place to try to trade. I do think it's going to go up. I don't know that it tests those highs, but I do expect upward movement. But I don't know how you trade it, to be quite honest with you. It's been a stay away for me for quite a while. I like the development, but it's still a stay away.
It needs chart development. There's no trade here until you get further time. That's my take on it. It either needs to high base until you catch up with time into that blue moving average at $70, and then we can break out of the pivot, or it's got a double bottom back towards the 200 period moving average, and both of those would take some time.
Matt, it's tough.
Any thoughts on trade here?
How do you say there's no trade here other than what you guys already said?
There's no trade here. All right. Bitcoin. There might be a trade here, though. Let's take a look at Bitcoin. I'm interested in this little pullback flag. It's more of a flag. Obviously, didn't come down very much. Matt, what's your read here on this Bitcoin chart? Do we got to catch that breakout?
For a new entry? Mm-hmm. Is that the question specifically? Yes. I think you're too tight against the breakout, and $1,000 on Bitcoin is literally nothing. It'll do it in a 15-minute time frame. So that's intraday analysis to me. And when it's intraday analysis to me, absolutely just wait for the daily breakout. So I think for any new entry, yeah, you're looking at a 50K breakout with confirmation. For any existing, you're a little concerned yesterday that the hammer candle didn't see a little more follow through on Wednesday. And so I do think it threw a little bit of cold water on the analysis to Bitcoin reclaiming that 65K all-time high. But buyers came back in today, kind of changes the dynamic there. Still looking at it as a flag-based pattern. Yesterday holding it today was important. It could have got a little ugly there for Bitcoin. So no, I don't think there's a new entry here. The buyers from the previous entry, they were a little concerned yesterday. Let's just put it like that. They're happy today, but there's no new entry in my opinion.
Yeah, I think yesterday's candle blew up the flag.
Yeah, I agree, Frankie. I agree,
and
Frankie.
So now it is the breakout above 50, and you got to like the response to it. So I could be talked into a breakout above 50, but I agree with Matt. I do think you have to break 50 before you get involved again.
Very good. Appreciate the thoughts. All right, let's move into stock talk here. We only got a couple of items in the news that we want to talk about. A few earnings reports, I believe, here, Matt. Which ones did you
I'm going to do this. I'm going to do this fairly quickly because there's just not a lot out there today on a day where most of the market is just talking about the Fed, and the rest of the people not talking about the Fed has already left for the weekend. And so I'm going to go through stock talk fairly quickly here today in earnings roundup. Marvel, tackle trading, darling. Marvel, a nice little semiconductor company, gap down on the technicals. I'll go to Frank there for his read here in a second. Marvel comes in at 34 cents versus expectation of 31. Revenue came in line at 1.1 billion. That represented a 47.9% yearly increase in revenue. The guidance was mixed, though. Raw numbers were boring. Mm-hmm. Seen better, seen worse. It was kind of one of those things. Mm-hmm. But from a guidance perspective, this is where the gap down was. Mixed guidance. They affirmed their quarterly EPS guidance, but they lowered their yearly revenue guidance. That's a little bit of a head scratcher to me for Marvel. So just a little bit. Just a tiny bit of concern regarding their guidance. Saw a little bit of a gap down. Still a healthy company. Investors aren't going to care about this in any capacity. Frankie, from a technical perspective, a little overextended coming into the earnings. Gap down, getting gobbled up at $60. What you read?
If I'm looking for a new trade, there's just going to be better looking semiconductor charts. It really is going to be that simple. These guys will probably need to do a little. I mean, hey, if this is your favorite company in the history of companies, maybe you take this as an opportunity.
I hope it's not.
If you're looking for semiconductor plays, we're just going to have better looking charts right now, at least in my opinion. And so we'll just let this one develop, see how we play. I mean, I do appreciate the response. I always like when we fire back off of the lows on an earnings gap. I always look at that as a positive thing, but not necessarily a positive thing for the next trading day, right? So I think development is in order here.
We have our favorite stocks, right? In semiconductors, we have our favorite 3 semiconductors.
Well, I love Marvel. I mean, right? it is one of my favorites.
It's one of mine too. But it's not my favorite trading semiconductor company. Like I much rather prefer, if I'm going to go trade, if I'm going to feel saucy and go trade semis, it's going to be AMD. I mean, I love trading AMD. There's other semiconductors like NVIDIA. I love trading NVIDIA. But for a cash flow purpose, like, it's one of my favorite semiconductors for cash flow purposes. Marvell's a wonderful cash flow candidate. Consistent, fundamentally good valuation, liquidity in the options market. It gives you what you ask for as a cash flow trader.
For sure.
Yeah. All right, next let's go to workday, W day here. W day, workday comes in, nice little gap out. Let's get Frank's read here. I'm willing to bet I can understand what Frank's going to say here on that nice little gap out. But workday comes in with a very impressive 129 versus expectation of 78 cents. So that was a nice little healthy beat on EPS numbers. Revenue came in slightly above the expectation at 1.3 versus 1.2. That resulted in an 18.7% yearly increase in revenue. The gap out was due on the EPS number, real positive beat on EPS in a stock that's been underperforming the market. Nice EPS beat, and not nice, I mean, that was a very healthy EPS beat. Gap out, no new trade here, Frankie. Going to need some development, in my opinion. Do you differ on that?
No, I mean, we're just too close to that 280 resistance level, right?
Yep.
So we can't even really entertain the idea of bar by barring it, trying to, catch some momentum that way. Just going to have to let it develop. Very nice move for sure.
Yeah, absolutely. And a very positive earnings
and a good
earnings
report
beat here as well.
I mean, hopefully this is one like a month from now I bring up, or like, hey, remember when you talked about this in earnings roundup?
Yeah. And I'll be like,
now we're knocking on the door.
I remember that nice beat. Let's go. I disagree. There's too many really good trends, really good stocks to look at this week. But again, positive response, and certainly going to certainly positive for the investor class out there.
For sure.
And that is all I have from an earnings roundup today.
I just have one, Matt, and I just want to look at it on the technicals. It's an old friend of yours and mine, our old friend Bill.
Bill?
Now, you know me, I don't dive into the numbers like you do, but I like to see if it's a beat, and they did have a beat, and they really had a huge fire. I just thought this was a fun one to look at because of the general craziness. I mean, these guys, from all accounts, from what I read, and granted, I trust you more than the headline stuff that I read on earnings roundup, but it looked like just a rock star report.
Bill, and I did look at them, and I did think about bringing them up a little bit today, but a lot of it was language over guidance. And not actual numbers. So
not actual numbers, just more on the guidance side.
They actually missed on their raw numbers, and so it was just one of those ones where gap out, run out on bad current scenarios, but hope for the future. And I just hate that analysis, quite frankly.
Yeah, I know those aren't your type.
It's a pet peeve of mine where it's like, oh yeah, currently it sucks, but in the future, everything we do is going to be great, even though in the future, a year ago, we weren't right. I just don't like that analysis. So I didn't bring it up because there's a lot to choose from, right?
Sure. They can only go through.
But I did look at them because technically it was very fascinating.
Yeah, I mean that's what caught my attention. Obviously, wow, that's a big pop.
There's a reason I went and looked at their numbers. I saw the same thing you did. I was like, wow, did they beat? How bad did they beat? And then I looked at the numbers. I'm like,
see, this is why it's nice to have a Matt around. He goes and looks at the numbers. He watches the Fed talk, so I can hang out and look at some charts. This is why I like keeping you around, Matty. This is
a company that cashed in $78 million at the loss of 7 cents a share. Right? What are we doing?
Yeah.
Bar by bar is what you're saying?
Bar by bar, momentum this. Yes, that's what I'm saying.
All right, love it. By the way, that workday report, it prompted me enough to put it on a watch list. I'm going to dig more into that company's fundamentals right now because it was very, very impressive numbers.
It was a good report.
All right, very good. The only other one I had was Tesla, real quick one here, Matt. I read this on Seeking Alpha actually this morning. They're filed with the Public Utility Commission in Texas to potentially sell electricity back into the grid. We remember earlier in the year that Tesla, they're in Texas.
They're going to fix Texas's utility grid.
There's a lot of speculation as to what this means. I just wanted to give the news because I thought it was interesting.
The weekend
got my attention. Yes, the weekend will be here before you know.
So the weekend, on a day I have to deal with the Fed. Now we're talking about how Tesla's going to fix Texas's grid.
More likely what they're going to do is sell regulatory credits back to
Yeah, I
Texas
know what
utilities.
Tesla's going to do. They're going to cash flow credits.
Yeah, that's exactly right. That's exactly right.
And
Find
they
ways.
are really good at that.
They're really dang good
really
at it.
good at that.
Absolutely.
That's the entire Tesla business model. If you want to buy our cars, fantastic. But what we're going to do is take all government credits from around the world.
They're good at it too. 3.8 billion since 2000.
Very good at it.
Since 2017, they've made 3.8 billion from regulatory credits. So absolutely. All right,
we're going to make money on how bad GM and Ford are. That's our business model.
That's pretty much it. All right, let's move.
I kid, guys. I kid. Tesla has a wonderful car.
Okay. I agree. By the way, I saw a bunch of stuff out there recently where, anyway, Lucid is saying they can outdo a Tesla. Their batteries are better. There's all these little fights in the EV industry, no doubt about it. All right, Frank, let's move into your charts here. Last thing we're going to do here today, you've got a bunch of your scanning done. I know you found some that you want to share with the team. It's one of the segments every week that the team tackle out there looks forward to the most. I know Coach Emily will be sneaking in here any moment. Frank, what you got here today?
Ooh, let's start with one of those reversals that Maddie was bringing up, and that's Airbnb.
Ooh.
Airbnb. We got a breakout. We got a Cody special going on that breakout, at least in my opinion on these guys right now. Got a nice clean window, right? As your kind of line is drawn up there in that 170 range. That is some old resistance and support zone from days gone by. Little snapback, like the bounce back that we've seen here today. It is a Cody special, right? We don't even have to fight about that one because it pulled back really, really fast right back into that channel. Very straightforward type of a trade, I guess, to me. We're basically, if we see some upward movement, hey, there's our confirmation of the breakout. Let's work our leg up to that 170 and see if we can win that fight. So just a Cody special snapback on a little reversal. Maddie, what you think?
Textbook here, Frankie. If you're looking at picking up Airbnb off a reversal for a swing trade, this is what it looks like.
Yeah.
I mean, that's what else do you say? This is what that looks like. You have a breakout on strong volume. You have a snapback retest. You have confirmation on the 9 kissing against a previous known resistance level. That is what reversals look like. And on Airbnb, this is specifically what it looks like. It's volatile. It's concerning. It's risky. It's all of that. It's not going to give you that 2-week window where you can contemplate life decisions and make the most accurate choice. This is, if you're looking at Airbnb, this is what that looks like. And so, yeah, I like the technical setup here. I like the breakout on strong volume. I like contracting volume on the pullback. I like the last 2 days of consolidation at the support level, right where the 9 EMA is, coincides with old resistance in the reversal breakout. When you take a look at this from an intraday perspective, 2 data points support this. Number one, yesterday's downward movement in price, where to get gobbled up into? Right there where the previous known resistance level was. Today, a little bit of a gap down, got gobbled up, same type of time frame. That is support building in the current moment. So yeah, I do like that. And then when you take this look out from a longer term perspective, you see a potential reversal candidate that if the daily chart confirms that bullish retracement, that successful swing trade confirms a longer term reversal of Airbnb. And so you have multiple time frame scenarios that could play a role with the momentum as well. Again, this is it's volatile. It's Airbnb, right? That goes without saying. It's one of those ones that can shift with the wind, but this is exactly what a reversal in Airbnb should look like. Quick on the breakout, quick on the retracement, volatile shifts, good intraday levels of analysis leading to good swing trade analysis. So, yeah, I like it, Frankie.
T-Dog, you think? Anything you'd add?
No, not at all. In fact, that candle grabbed my attention, Matt, first. I'm glad you highlighted it. The breakout on volume, the snap back into those retracements. Definitely, this is a keeper. I'm going to start mapping out reward risk.
Oh, and by the way, I'd put any swing trade at a coin flip.
Yeah.
But it's the potential return with momentum behind it that you still take it, if that makes sense.
Yep.
It's the pattern.
Yep. It's that. Well, let's stick with one other reversal then. And that's Fold, F-O-L-D. Got a little biotech company who have been sideways for quite some time now on the bottom end of it. really finally just started breaking, at least in my opinion, out of that range this week. Today's candle, definitely a very nice addition to it. Long sideways. I know this is one of Mark's things, right? Something that's gone sideways for, I mean, we all like it to one degree or another. Long sideways movement, finally breaking to the upside. Got a little bit of room to run too. What I like about these guys is, one, they're fairly inexpensive, right? In the $11 range, which is, which is always nice, right? You never complain about that. They have a little bit of room until their 200-day moving average, which I think we probably have to respect, at least as a potential, place where we need to do something, whether it's take profits, scale out, move stop losses, whatever. But I do think that still leaves you in a favorable, over 2-to-1 risk to reward type of scenario. So a little bit earlier maybe than the Airbnb. And if I were picking one, and luckily you don't have to, right? You can trade whatever you want. I might prefer Airbnb just a little bit, but I do really like this bottoming pattern. I really like what the way the weekly candle is going to look coming out of this consolidation as well. So Tim, I'm going
to look like confirmation is what it's going to look like.
Exactly. It's going to be, and it's, it's, listen, is this the bottom? I don't know, but this is what I look for as a bottom fisherman. I want something that's very, very clean. Technically, it's very easy to map out a trade. I like the window that I have to work with. Doesn't necessarily mean that 200 has to be my target, but I do have a nice little window of opportunity. Well, and so, yeah, I'll throw it back to you, Maddie.
Yeah, there's a couple things supporting this, Frankie, and it starts with multiple time frame analysis. And when you're looking at multiple time frame analysis, day traders, they look at intraday analysis, swing traders look at daily charts, and in position traders, investors look at weekly charts. That's a very generic way of saying it, but that's basically what different types of traders look at different time frames.
Yeah.
As a swing to position trader, the two time frames that are most important to me are the intraday data supporting the daily evidence, the daily price action that we're reading. Okay. And then when you look at it from a multiple time perspective, seeing the weekly chart and having that confirm your bias on the daily chart helps build confidence, in my opinion, as well in the position. And what I'm seeing here from a daily perspective is, number one, we just broke out of the range. That's number one. You're seeing a little bit of evidence start to build on this 9 EMA, which we love as swing traders. We love the 9 EMA as swing traders.
We do.
And you're seeing that evidence start to build right here. In fact, a nice little test of the 9 EMA for the first time in the last week, pounded off that today, and then looked at confirmation. You bring this out to a longer time frame, and you can see this reversal really clear here on that longer time frame. Nice little double bottom scenario right there south of $9, right about $8.75. Comes back up into the $11 range. Resistance is confirmed the same way it was over here. Comes down into the same range at $8.75. Confirms that. It's dealt with multiple different earnings announcements in this consolidation, and yet the pattern maintained its integrity. When you're looking at it now, you're looking at today with confirmation against that reversal. Frankie, you said the moving averages are smiling to you earlier today. That had a strong jawline on the one you're looking at. This is more of that traditional, just U-shaped type reversal.
It looks like a villain's mustache,
right? like V for Vendetta's mustache.
Yeah,
a little bit. But so you got you got compelling evidence on the weekly chart that does support any type of trade on the daily chart. I like this from a reversal perspective. We talked about it a couple weeks ago in the scatter report meeting as it was kissing against that. Never occurred. Got that confirmation here this week. I like it. I think it has multiple time frame. The only question is targets for me. I do think you got to take into account $12 here. $12 is an old resistance support, a lot of consolidation over there, and then you do have an old pivot point at 1280 that is slightly concerning as well. So I would just have to look at entry to stop and entry to targets there, but I think you're fine.
So yeah, I would imagine you're fine, and that's always, that goes without saying, right? I'm sure everyone here has passed on a really good entry because risk to reward wasn't there. we complain about it, but there's a reason it's our rule, right?
Well, there's just so many stocks to trade. You don't have to trade negative reward to risk ratio ones.
Nope.
That's
And you
right.
shouldn't. You shouldn't.
right.
You know, there's a reason. Pretty much every swing trader, has that rule, right? So,
well, and specifically the way we do targeting and tackle trading, it's 1-to-1 at target 1 and 2-to-1 at target 2, according to the step system. But our target ones are always extremely conservative. That's just how we are from a targeting perspective.
I think it's a good, solid approach, personally.
Can I throw a little cold water on this one?
Sure.
I just want to see what you guys think. I mean, this is a biotech company, right? And the very first question I had was that gap back in February. I looked at 5 years of data. It's the only time it's happened. It was clinical trial data that came out in February, made the stock gap from 19 down to 13. Does that throw you guys off the trade at all? I mean, when you see one gap in 5 to 8 years that was an impact of news around a biotech company, or do you just see it, okay, it's a cheap stock and I can map out reward to risk based on my comfort level?
Do they have a drug coming up in front of the FDA in the next 2 weeks?
I have an open question. I don't have any.
I would have to. Obviously, I am analyzing technically before I make the trade. I would certainly look into that.
Yeah,
sure, and I think that's fair.
Open questions for me.
And I know some people, don't like to trade the biotechs, and I listen. You never have to explain to me why you want to shy away from a stock or an industry or whatever the case might be.
That's all personal preference.
It wouldn't, it wouldn't concern me. Personally, it just doesn't have that history, right? I would understand that just like, hey, I might wake up to a huge gap one way or the other. That is, I think, an added risk / reward, if I'm going to trade this. But I don't think, if I thought for 1 second that they had a history of just unpredictability, then I would 100% say good luck to everybody doing it. But I personally don't feel that way.
And they don't have that.
And I don't see that in this chart at all.
Yeah.
Like you just don't see that. Yes, the one scenario here, but again, you're talking about one scenario where a drug was probably very well known going in front of approval. Like, I'm sure people who are trading and investing in this stock were well aware of that. So, well, not everybody, but they should have been, right?
Right. And the investors definitely were.
Oh, guaranteed. But yeah, I'm with Frankie. Like, no.
Gotcha. All right.
Yeah. But, I think it's fair.
The end of the world could happen on Sunday. We're still going to be making some trades.
There you go. I just want to throw it out there. All right. What you got next there, Frankie?
All right. Well, let's go from a couple reversals to a little pullback on a good friend of pretty much all of ours here at Tackle Trading and pretty much everybody in the market, and that's Microsoft.
Yes.
Yeah, this one was an easy one, right? This one was just let's get this one through, get it over with, so I can
move on, save time. By the way, this is exactly how the scanner report meeting goes, guys. Is if something's really good, like everybody will be like, yeah, move on, save time, we're good. Yeah. Nobody's saying no to that. Yeah. If it's a garbage pick, we'll debate it for 45 minutes, like literally.
Yeah.
Microsoft, we're good. Everybody's good. Flag off the 9, hammered candle. It's hammer time. Let's start dancing. Put on the pants. We're good.
Yeah. Not anything wrong with that, right? Yeah. That's, how do you not like that developing setup, right?
You have to.
Gotta like where that one is. All right, we'll do a couple more. I love doing these. Maddie, a few weeks or a while back now, you did an earnings roundup on HCA. Had a big, huge gap on, if memory serves, and mostly I just know if you bring it up in earnings roundup and it was a good response, and I noted it's because it was a good report. So I assume that my memory isn't that bad. Here we are. We've now had basically a couple of months near of consolidation, pushing the top of the breakout post earnings. We've had some time to let that volatility subside, a new pattern develop, got a clear support zone down at around 240. We've got a clear resistance level up here around, around 255-ish, depending on exactly where you put it. Could I talk either of you into a breakout if we get it on HCA?
Looking at that earnings report, that was a very good earnings report, by the way. You're talking about a company that beat on EPS numbers. And when I mean beat, I mean like utter destruction.
Yeah, I remember it. Yeah, I remember you going over it.
Revenue numbers were decent, but I believe they certainly beat. But it was also their guidance. Their guidance was up both on the revenue and EPS perspective. So HCA was one of those healthcare stocks that had a lot of healthcare stocks had good earnings season. They're slowing momentum now post earnings, but they've they had really good reporting season. And HCA, from a fundamental standpoint, certainly was a standout there. But when you look at that secondary type scenario, the first opportunity you had was this flag. The second one was that breakout. Everything else is just garbage up until the time we're looking at it right now from a breakout. And so nothing really confirmed or broke out. When you look at this now after 3-4 weeks, what you're going to see is you're going to see that choppy nastiness on the daily chart. That just looks like a high base that the 9 EMA is now caught up to it with it fighting for a potential breakout. And the conversation we always have on breakouts and the cleanliness of it starts with wicks versus bodies on candles. From a body perspective, you got to call this a breakout. I do think you have to look at the wicks, though. The 255.28 wicks, that coincides really closely with the high there, the high there, the high today. And so I do think you need to close above the wicks. But if you close above the wicks, you're talking about a multiple time frame perspective of swing traders and position traders simultaneously liking this, whereas the backdrop of the fundamentals for the investor class is extremely strong right now. And so, yeah, I wouldn't say no to that one, Frankie. I like the consolidation. And again, outside of one day, guys, this consolidation was for the most part within the candle here. Right? It was within a lot of that candle. And so you're looking at that as a potential breakout with multiple time frames. I say yes, but I also say you got to close above the wick.
And that's fair. That's fair. But I love patterns like this. These are the kind of things I look for in markets. Like when you have a strong fundamental catalyst, like Matt talked about, give me some time to set up a new pattern to a new entry. I love this kind of stuff. So yeah, for me, yes.
Yeah. I love the post earnings that have taken some time to develop type of patterns as well. I've always been a big fan.
Well, and honestly, my favorite is when we get a nice little swing setup a week after earnings, right? Give it a week, give you a flag, give you a breakout. I love that. But if you do get more time like HCA did, because you don't get to pick it, right? That's not your choice. You don't get to tell HCA to break out. You don't get to tell what to do. And so you just got to kind of read the analysis. And so, yeah, I do like the potential breakout here. That was strong, didn't confirm. Now you're looking at it and saying, now with all this time now of consolidation, I kind of like it even more than I did even 3 weeks ago.
Yeah. I've never really thought about it like this, Matt, but like post earnings, if it's not like the first week, give me over a month in the developing of the pattern. When you said that's immediately kind of that is kind of what I do.
How we do it. But it's not just from a technical perspective. We do it because it leaves our mind. It leaves what we're thinking about, right?
Yeah.
HCA comes out, reports earnings. We're all over it that day, right? We're talking about what we need. The following week, I'm looking at, or a week and a half, I'm looking at HCA and I'm saying, okay, that hammer candle right here, right? That hammer candle, testing that wick, testing it. I'm like, you got a chance. Let's go. But then it doesn't do it. And I'm like, okay, I don't look at HCA, right? I don't look at HCA. I'm not talking HCA. This week, I'm all talking Fed and consolidation and breaking down markets and everything else I'm doing. And you know what else? I'm also doing other things outside of the markets and whatnot. And I don't think about it until my good friend Frankie brings it up on a random Friday. And I'm like, oh, yeah, I remember that potential trade. Let's go. So it's kind of psychological in nature as well, right? It just, if it doesn't confirm in that first week or week and a half, you're just like,
yeah.
I'll catch it when either somebody talks about it or when I find it on next week's Friday scans.
That's
right. Yep.
That's when I'll catch it.
Happens to me all the time too. Yeah.
Sounds about right.
Any more, Frankie?
I hope other people are like, yeah, that's me too.
I think that's pretty common.
That's
the way we do it.
Yeah, I think it is. Just maybe a couple quick ones. I won't take too long. Darden Restaurants broke out today. DRI, another long range consolidation, multiple time frame analysis, just a good clean. The only issue theoretically we might run into is there's a pretty good size candle. So depending on targeting and stop and everything, might be needing to look to the secondary pattern. I hate when it has a huge candle on the day of the break, because for most breakout trades, my rule is a close and not going above it. and this would definitely fit into that category. But you gotta like breaking out of this long-term consolidation, and I, just me, the way I target, in that 167 range is where I see these guys kind of as naturally working their way to in the days ahead. So, whether this is a trade that could make the report, or we can make the risk to reward work, I'm on the fence on that. It's going to be fairly tight for me personally, at least, but I love the pattern. And
my next special webinar I'm doing is when to front run.
Ooh.
I like that. I like that because,
too.
Frankie, I don't love chasing.
No, it's tough to chase.
Right? I just don't love chasing. And I feel like with Darden, you're chasing a little bit of the breakout right now. Number one, not just because of the size of the candle, because of the distance of the candle where it came into without resetting the technical, right?
Yeah, we had like a day.
And so I kind of feel like you're bar by bar here at this point. So you're certainly looking at it as a breakout, and it certainly can be traded. I just think you're doing the proverbial bar by bar momentum style, right? Entry above the high, stop under the low, just manage that. And as long as that bar continues to show momentum, you're good to go, right? So I do think you can momentum bar by bar this, and you do got to love the weekly breakout here. I do think you got to love the weekly breakout here. That weekly breakout, consolidation for 4 months, breaking out, that is a beautiful technical scenario to be in for Darden. But just from a swing trader's perspective, I think there's a lot of candidates you don't have to bar by bar momentum with. And if you and this is just me, if I don't have to bar by bar and I can just go to a standard technical scenario where I can apply step system mechanics, I'd always do that over bar by bar. But again, that's just more personal preference than it is actual system. Bar by bar momentum trading can be extremely powerful. But I am going to put a webinar together. When to front run.
Front run.
There you go.
It'd be a good one. I would like, obviously there are times you do it when you're breaking out. Your times you do it on your flags. Yeah. There's a couple of different
and those times have nothing to do with how you personally feel about your life.
That's right.
It should be
an emotional everything to do about the technical analysis you're reading in front of the breakout.
Subtleties in your technicals. That's right.
All right, I got one more for Tim, and I'll shut up.
This
one's for you, Tim, and that's Carnival, CCL.
Oh, goodness. I was hoping you'd say something else.
Oh. You had such our grandmother's response to that one. Every time I'd walk in her door, she'd look at me and go, I was expecting somebody else.
I was expecting Tim. I've heard all of the Tim grandma stories. They might be embellished a little bit.
No,
they are not. They are not. This is traumatic experiences when I was a child.
They're not.
I don't dispute that.
Even Tim's like, they're not. They're not.
They're not. I'm not going to sit here and front that. But what do you got here? I mean, Carnival Cruise Lines obviously been all over the news the last couple of years. What are you seeing here, Frank?
Well, a couple of things that I am interested in. We've created higher lows along the way, right? So over this last little while, we've been dipping and slipping, but we always seem to find a way to create a higher low. We keep getting slapped down when we get into that 200-day moving average, right? That's not terribly surprising. We probably expect that as the most likely thing, right? Here we are today trying, and we'll see if we're able to do it, but we're trying to close above that. We're going to need some follow through, right? And I understand this is not going to be in everybody's type of a trade, but as it is right now, it looks like we're going to close above that 200 and above the 50 and above all that junk. We've got a ton of old stuff, right? Some old resistance going back into December, support zone throughout March into May. We've got some history at this price point and a pretty, while again, they've been everywhere up into the next resistance level. When I look at these guys, I say, okay, well, what causes me trouble, right? And when I look at these guys and wonder what scares me off, if we can get through what we're fighting right now, I have nothing jumps out until $30, where we have, we do have some stuff there, right, that we do need to be keeping an eye out for. So we have a little bit of a window of opportunity as well. So it's kind of the increasing, support levels, The breaking above the 200, which, again, there's still some time, so we'll see. It hasn't, as Mark and I say, you haven't closed until you've closed, right? But I'm making a general assumption, and even if we didn't, then I could use today, what would be today's high for that confirmation going into the future. But just a little bit of a reversal. I like it. I'm figuring this is a place where a lot of bears would potentially be stopped out for whatever that is worth. Little bit of a window into that $30 range. If I'm looking at reopening, I can get a favorable risk to reward, some nice clean space to work with. I'm interested from a technical point of view.
I think it's fair. The only question I have from Matt then is the little candle consolidation over the last 3 days. Is that resetting that as a pivot, or is this an extension of the pivot from 21?
I don't think it's resetting the pivot, but I do think you're confirming a breakout, and so pivot analysis would need a little bit more time, in my opinion. I see this more as 2-day consolidation before you break out. But I also don't. I think we're kind of, what's the word? I'm trying to figure out the word. When you're nitpicking, right? I think we're nitpicking that
splitting hairs.
A little bit. Yeah, we're splitting hairs, nitpicking there, because I think the most important thing is in the analysis is this a breakout at this point?
Yeah.
And so you are reclaiming the 200-day moving average. You're reclaiming the 24 handle and slightly north of 24 with the 200-day moving average. Those are both very supporting evidence. You now have your moving averages turning over. You reclaim the 50-day today as well, but your 90 EMA is turning over here, going to provide some momentum to CCL here. The question, and this is not a question so much on Carnival as it is just in reversals and opportunity in general, is just where do you target in this chop? Because as Frank says, there's nothing that concerns him too much until 30. There is some chop between 25 and 26 that could play a role, right? And so, and again, some of that is just, well, it's subjective, because the longer it goes, the less you're concerned about all of this stuff over here, and you're just starting to look at this stuff right here. And so I'm looking at 25 here, and I'm saying, okay, if we can achieve this, the 200-day moving average, give us some continuation momentum above 25, I can certainly see it. We have some evidence in recent history of running a breakout of 24 to 30. You saw the breakout of 25 right here to 30. And so there has been evidence there. I do see the opportunity. And I do think with Carnival, you got a little bit of cheap risk. And so with that cheap risk, with the momentum you're seeing, maybe you discount a little bit the mess to the left. This is a choppy stock in general, right? The kind of the psychology of Carnival Cruise is a choppy stock, but I do like it, Frankie. I see a little bit of chop that does concern me, but I do think the opportunity is probably the opportunity outweighs that perception of risk.
Yeah, I think that's a fair read.
It's fair. I don't know. My brain goes elsewhere with this one, though. I'm with you guys on the technicals. I just have other concerns, right?
It's not Carnival isn't. It's not for me. But
yeah, it's not a trade for me.
Yeah, I mean it's a themey one, right? And if you if you don't like, I understand. Yeah,
it's Mark. Yeah. Like if Mark sees this, he probably likes it a heck of a lot more than I do.
He would have put down his can of tuna, come back to the show, and be like, "Ooh, I like this one." He would absolutely let us know.
And I can't criticize. There just is some noise to the left that is concerning a little bit. But again, I would not be surprised to see Carnival at 30 within 2-3 weeks.
Yeah. Well, and for me, and just lay it out there, I have short-term concerns about Delta variant COVID data in September. We still haven't seen all that kind of top itself out. There's some indications of that reopening type of play. For me, if I'm looking in this area of the market, I might look elsewhere.
Fair enough.
And I understand that, but those concerns have been in Carnival for the last month, and we haven't seen that volatility.
I get it, and it's still shaping up. So I think it's fair. Yeah, I think it's fair. All right.
I know, but never mind. I'll save that for the podcast.
Yeah, sounds great. Frankie, there's some interesting, like you started the show with, actually, there's a lot of high base potential breakouts. There's a lot of these reversal potential breakouts. It looks like we're going to have a good week of reports and a lot of good candidates on those reports for people out there. I'm excited to have those conversations with the team here in just a few minutes and start shaping that together. Let's start moving to the back of the show and start wrapping this thing up here, Matty. Any final thoughts you got for the team there, Matt?
Me and Frankie could sit literally for hours and hours and hours and just do this. Frank pitching me a stock and me breaking it down and us debating the quality of it. Like literally we could do this for hours and hours and hours and hours.
I could
You've done it many times.
We will do it for hours and hours and hours and hours later today. No, that ain't work. That's just fun for me and Frankie. We love doing the charting and whatnot and just geek out on all things technical analysis. Been a fascinating week here at Tackle Trading with a lot of the market breaking out this week, confirming those breakouts. Going to be an interesting. I haven't done my scanning yet, but I'm very interested to do it because I kind of have a feeling of what I'm going to see. And I kind of have a feeling that's going to confirm Frank's excitement for those breakouts. So I'm excited to break them down with Frankie and the other coaches at Tackle Trading, get the reports, the scouting reports, the stock and the options reports to our community tomorrow. And then obviously go through the sectors, ranking all the sectors, talk about upgrades and downgrades, getting the newsletter ready. And for our pro member community out there at Tackle Trading, the weekend starts with the scouting reports and the newsletter. And for myself, I will see you guys bright and early on Monday morning during the halftime report. Tackle Trading, you guys have a beautiful and wonderful, wonderful, wonderful weekend. Thanks for staying with us throughout the week for all our live webinars on YouTube. And for the pro member community, check out those scouting reports and newsletter. We'll see you on Monday.
Absolutely. We will see on Monday. One quick programming note, just in case you didn't get the note from Coach Mark. He's headed out to a wedding. So if you're looking for his weekend wrap up the end of the day,
not his wedding.
Or not his wedding.
So we think.
He's heading to a wedding. I even had to ask him this morning, actually, Frank.
I don't blame.
Here's how it worked. Mark. Here's how that worked. Hey, Mark, where are you going? I'm going to a wedding. Is it your wedding? No. Is there a time in our future where you're going to say yes to that? No. Hypothetically, if you ever did get married again, would you do it this way? Yes.
Yeah, that's right. That's exactly right.
Yep.
That was the conversation. So we have zero clue what is transpiring. We'll keep you posted over the weekend.
Fair enough. All right, guys. Have a wonderful weekend.